Next, from a review of the above information and the ratios, describe 7 audit risk and audit response. Okay, how many marks? 14 marks. Fine. Explain the safeguards which and should take to should implement to ensure the conflict of interest is properly managed. Is it right? Is properly managed as such. Okay, fine. Now we have to think over it and carry forward on that basis. Is it right? The first one is knowledge based question. Is that 5 marks? Question is knowledge based, theoretical question. Next, calculations and next analysis, and subsequently we are talking about the audit risk and audit experience. Okay, first now we will see what there is, what they are asking us. Okay, what is the scenario? They gave you the ratio analysis. Keep it in mind. Formulas for ratio analysis you need to remember. There is no other option for us. Is it right? Now you are an audit supervisor of INTS, and we are mailing to final audit of Centipede, which is a listed company. 31st March on it is 1st July. The company purchase consumer packaged goods and sell these goods on the website. This is a new client. This is a new client. Okay. Now these are the most important things. In for your firm, and your audit manager has already had a planning meeting with the finance. It's a new client means definitely we should have a correspondence with the outgoing auditor. Okay, we should have a correspondence with the outgoing auditor. That is the reason they gave you question number 1. Client background and notes for planning. Rather than undertaking a full year inventory count, the company undertakes monthly perpetual inventory covering 1/12 of all lines monthly. As part of the interim audit which was completed earlier in the year, an audit assistant attended. A perpetual audit assistant has attended perpetual inventory count in September and noted that there are a large number of exceptions where inventory records are consistently higher than the physical inventory. Means what we have to do? We have to do some reconciliations. Is it right? We have to do some because inventory records are showing higher. Is it right? And whereas physical inventory is showing lesser. When discussing these exceptions with the finance director, the assistant was informed that this has been recurring issues all the year. In addition, the audit assistants noted that there are some lines of inventory which, according to the records, were at least 90 days old. Is it right? Is it right? What we used to take this aged inventory. Is it right? We are talking in terms of what? Aged inventory. Centipede has a head office where the audit team will be based to conduct the audit. However, there are 4 additional sites where some accounting records are maintained, and these sites have not visited during the interim audit. The records of these sites are incorporated monthly through interface. No physical inspections. Okay, no physical inspections. Is it right? It was who will say interface? Interface means just on system. The 5th site was closed down in the year 2004. However, the building was sold for 2025. One of the Centipede wholesale customers is alleging that the company has consistently failed. All are negative things. Is that this is the way it will happen? Is that you will get 90% of your ideas by reading the question. Okay, failed to deliver the goods in a saleable conditions on time. Hence, commercial legal action as Centipede has loss of profits claim. The directors disclosed that remuneration details in the financial statements in line with IFRS which does not require a separate list of director names and payments. However, in the country in which Centipede was based, local legislation requires disclosures of the names of the directors and the amount of remuneration payable to each director. Is it right? What they are saying, see that there is an audit risk. Audit risk is that you are covering 1/12 of the lines of month. Okay, is that this is one of the audit risk. Or you have to make a response. Is that inventory is consistently there is a difference between the records and the physical inventory. Okay. And there has been informed, this has been happening all through the year. Is it right? This has been happening all through the year. We want 7 audit risk. Okay, keep it in mind. That's very important. How many audit risk we need? We need 7. Is it? We have to work out on those 7 bases. Next, at least 30 years old, sent her head office and is based on the to conduct the audit, 4 additional sites where some accounting records are maintained, and these sites has not been visited. Okay, a 5th site was closed down. We don't know how they have sold it, how they have valued it. Centipede wholesale customers is alleged that there is a consistently failed to delivery. Is it right? Point number 6. Hence, it has commenced legal actions against Centipede for loss of there was a legal claim. The directors have disclosed their remuneration details in the financial statements in line with FRR, which does not require a special list of director names and payment. However, have disclosed their remuneration details in the financial statements in line with IFRS. Okay. However, in the country in which Centipede is based, local legislation requires disclosure of the names and directors and the amount of remuneration payable to each director. Fine. Is it right? Now we have to calculate 6 ratios. Is it right? Which ratios we can calculate? Please tell me fast. Tell me, with this information, which ratios we can calculate?
Gross profit.
Good.
Inventory turnover.
Gross profit.
Receivables days.
Inventory, receivables. Next.
Trade payable.
Trade payables.
Quick ratio.
Quick ratio. Current ratio also we can do.
Yes, current ratio.
Next. Very fast. What is the formula for this?
Gross profit divided by revenue.
Okay. Next.
Also, we can calculate operating profit.
Okay, that's good. Next. What is the inventory?
Inventory.
3 divided
by cost of sales
Good.
into 365.
Good. Next. Receivables.
Receivables divided by revenue into 365.
Good. Next. Payables.
Payables divided by cost of sales
Good.
into 365.
Quick ratio.
Current asset minus inventory divided by current liability.
Quick current ratio.
Current asset divided by current liability.
Operating profit ratio.
Operating profit divided by revenue.
Okay. Now, I'm not going. We are not going to calculate that. Okay. But in examination, keep it in mind. See, they will give this type of things. Very simple. Almost 10 marks will be for calculations. Is it? Including MCQ. Okay, including MCQ. As simple as that. Okay. You put like this. Is that 10 marks will be there for calculations. Fine. Almost 60 marks will be on scenarios. Is it? Balance 30 marks. 30 marks will be on the theory. Okay. Now, is that what we have to do? I'm just going to the question answer paper. Okay. Wait for a while. They are asking you what matters should be considered. Is that 5 marks, 5 points. 6 ratios. What is the audit risk? Is it right? What is the audit risk and what is the audit response? Is it? What is the audit risk and what is the audit response? You should make it a 2 columns. Okay. And we have not covered this. Okay. First we will complete 1, 2, 3 ABC. Then we'll go for the point number D. Okay. Then we'll go for point number D. Here you have the answers for all the things. Is it right? I will send you this file once it's done. Now you see the things. Is it right? It is stepwise marking. Okay. It's stepwise marking. I'm not going to. We are not going to go in detail. I will give you how the things. What the requirement, what matters should be taken into consideration. Is it right? What matters should be taken into consideration is 5 marks. Okay. Any 5. Is that compliance with ACCA code of conduct, ethics and conduct. Last thing you are going to do. Tomorrow is the exam. Okay. Tomorrow is the exam. You have to just work out on these points only. Don't do anything else. See, I'm taking the risk. I'm telling you. Okay. I'm taking the risk and with my responsibility. What matters to be considered prior to accepting? This is the summary of the summaries. Okay. You compliance with the ACCA code of conduct. Is it right? Ethics code of conduct. With respect to the auditors has to be competent and qualified. You have to take the reputation and integrity of directors. Yesterday we have done this. Level of risk of centipede. What is the level of risk associated with the audit? You have to take into consideration is the fee is adequate to compensate to do the work. Is it right? Write to the outgoing auditor and you have to obtain the permission. Previous auditor permission to respond. Is it right? And review response for any issues. Is it right? Review response for any. Fine. These are the things you have to write any 5. Any 5 you choose. Next. 6 ratios are there. 1, 2, 3, 4, 5, 6, 7. Is it right? I don't know why they have mark for each year. Fine. Yes. Is it right? They ask you to calculate 2 years now. They ask you to 6 ratios. Is it right? 6 means for 2 years. 1 year and second year. They are giving how much marks? Just imagine half mark. 1 ratio, 1 mark. Is it right? Very important. any 6. Is it right? Any 6. And these are the standard ratios. You will not get anything beyond that. You will not get something gearing ratio, all. I don't think so they will give. Is it right? By now you have that idea that which ratios they will give. Is it right? Next. What is the audit risk and what is the audit risk and what these are new client, okay? New client, if you are a new client, you are a new auditor. First time you are taking the audit, first year of audit. These are the most common we have done. I think this is the 7th or 8th question we are doing. If you are taking the assignment for the first year, definitely the new client, the risk is very, very high. Is right? Increase the deduction risk. Now, what they say, it is a perpetual count adjustments. Is it right? Perpetual count adjustment means it is a what it says. Yeah, the company undertakes perpetual monthly perpetual inventory count system covering 1/5 continuous. Is it right? It is not periodic. Periodic means month to month. Perpetual means continuous. Is it covering 1/12 of the lines of sales? Fine. Next. Is it? You are having 5 other centers. Is it right? You are having 4 other places. We are not doing any count there. It is an audit risk. You are taking the interface. Is it right? You are doing the verification by interface. You have sold the building. It is means you don't know how they have valued it, and you should know what is the valuation. You have to get the expert. Is it right? There is a legal case because lot of goods has been not accepted, and the client has filed a legal case for recoveries. Directors remuneration disclosure. It has to be done as per the local legislations. And last but not the least, revenue growth as such. Is it right? 1, 2, 3, 4, 5, 6, 7, 8. Is it 7, 8? Fine. They have given misclassification of cost between cost of sales and operating expenses, and they are talking in terms of what? Why they say it is a going concern? Because there is a legal case. Is that there is a legal case, and there are lot of claims are there. Is it right? Lot of claims are there. Fine. Now, based on that, we have to make it a point. Okay. First, you have to. This is the summary. Okay. This is the marking scheme. And now you can imagine point to point they will give. Okay. Is it? Now, matters to be considered prior to accepting the audit of the central bank. Okay. What matters you have to consider? Is it right? See, simple, take it. Anti-auditor should communicate with the outgoing auditor of central pit to assess. Don't write single sentence answers. If there is any ethical or professional reasons, Why they should not be accepted appointment? They should obtain the permission from Centipede management to contact the previous auditor. With the knowledge of the management, you have to contact. If the management has not given permission, then the engagement should have been refused. You have to take the permission of the management to contact the previous auditor. If the management has said yes, get the permission. If they are saying that if it is going to be accepted, if it is not accepted. If it is not, if the previous auditor says don't accept, you have to go into details, check with the management, is it? And straight away it has to be refused. Once received, the response from the previous auditor should be carefully reviewed and which could affect the accept. Once you are getting the letter from the previous auditor, you have to review, then accept. Directly you cannot accept. Okay. Now, coming back to this, is it right? What I want to say that this is one of the points. Is it right? Take this. This is one of the points. Fine. Next. 5 marks. Is it right? It says that, remember this, ISA 220, quality or control of audit of financial statements. This we have not done. Understand? This we have not done. This is first time you are doing this. Is it right? Even it has not been mentioned in the lecture slides. Is it? But it is there at the end of the book. If you take the e-book, it is there. Lecture 13. What says? Guidance to &S company on the steps they should have taken in accepting a new audit client. Before you accept the new client, you have to follow the guidance provided by ISA 2020, quality control for audit of financial statement. What it says, the rule says that Centipede company, it sets the number of processes whether the auditor should perform prior to accepting a new engagement. You have to follow the process. Got my point? You have to follow the process. There is a framework. Okay, there is a framework. That framework you have to follow. This is the first point. Is that you have to follow the framework as per 220. Is it right? That whether period to accepting the audit. Fine. And that process should not be breakdown. Point number 2. Should have considered issues. What issues we have to consider? Ethics and conduct. Code of ethics. Is it right? Code of ethics. We have principles. Is it right? Now tell me, what are the principles? ACCA code of ethics is there. See the things. Ethics and okay. Ethics and acceptance. What is there? Is it right? What are the fundamental principles? Is that fundamental principles are integrity, objectivity, competence, confidentiality, behavior. Is it right? Fundamental principles. And what are is that ACCA 5 fundamental principles are integrity, objectivity, professional competence, due care and professional behavior. Whereas what are the other things where it is there? Where is that? Yeah. My throat is gone. Is it right? 5. What are the threats? Self-review, self-interest, self-review, advocacy, familiarity. Is it right? Now, those are the fundamental principles. These are the threats. Okay. Where is that our answer? Is that fundamental principles? And see, fundamental principles are what? Tell me fast. Objectivity. Next.
Integrity.
Confidentiality,
Confidentiality.
integrity,
Next.
professional behavior,
Next.
professional competence,
Next. Okay. And here, threats.
Self-interest.
Next.
Self-integrity.
Next. Self. Next.
intimidation,
Next.
advocacy,
Next.
familiarity.
Good. Fine. And financial framework also, is it right? Conceptual framework. Conceptual framework, is it right? We have to take into consideration. I think they may have written somewhere. My goodness. Conceptual framework. Here they have mentioned here. Is it right? Any local legislations. Local legislations, IFRS, ISA. Okay? That's where it. And yes, should consider any issues which may arise which could threaten the compliance of code of ethics or local legislation, such as level of fees, to ensure that they are not unduly reliant on this. Fee structure is very important. It should not, is it right? Fee structure is very important. You should not exceed that fee structure. As well as whether any conflict of interest arises with existing clients. Conflict of interest means any familiarity, anything intimidation, familiarity. Most importantly, conflict of interest is familiarity. Is it right? Or in some cases, it will be a self-interest also. Self-interest is related to money, fees. Okay. In addition, they should also consider that whether they are competent. That's very important. Is it right? The most important thing is are they in a position to do the work or not? Is it right? Whether they are qualified or they are not qualified. That is where they have the resources available. Is it? And if any specialist they require, they should take the assistance of that specialist. Okay, third point. Fourth point, what it says, they should know about the directors. Is it right? What already knows about the directors? Very important. Yesterday we have done this. Again, I will repeat that. Is it right? It needs to consider reputation and integrity of the directors. How the directors are there, how they are performing, and what is the credibility. If necessary, the firm has to obtain what? The firm has to obtain references. Is it? The firm has to obtain references. Okay. Next. Apart from that, they should also know this is little bit difficult. I will say difficult is difficult. Is that maybe for you it is easy, but I will say that you have to. There is no other option. You have to write this. We have to take into consideration 220 before we have to follow the procedures laid down as per ISA 220. Second one, we have to follow the ACCA Code of Ethics. Third one, we are competent or not. Fourth one, we have to know the directors. And fifth one, very simple, is right? Fifth one, we have to take the permission from the previous outgoing auditors. And if you want to be there, you should have considered the level of risk attached to the audit. Is it level of? As per the level of risk, the audit fee also will be charged. Okay, the first one. Next one. They have calculated the ratios. Need to calculate. We have not done that. Is it right? We have not done gross profit 1, 2, 3, 4, 5, 6, 7, 8. Is it? You have the option. There is no condition that you have to do these type of ratios only. Any 6 ratios, any 5 ratios, you do it for both the years. Very easy scoring marks. Very easy. Is it? If it is 6 marks, it makes a lot. Okay. Next. One by one. Okay. What is the risk and what is the response? How many they have said? They have said 7. Okay. See, now I will tell you. In the examination, because of lot of pressures, tense, all those things, is that we can identify 7. No issue on that. If you cannot identify 7, okay, don't pressurize yourself. Don't wait till you complete 7. Don't wait. Is it? You have done 5. Go to the next one. Immediately. If you wherever you got struck, go to the next one immediately. Don't waste time. Give space. Is that? You can do it on the computer. Give space. Go to the second one. Is that? Now you see the thing. You have what? You have A, B, C, D. First you put, is it right? First you put 16 A's, 16 B, 16 C, 16 D. First you put the numbers. Okay. Now, whichever you find easy, do it. Is that? Whichever you find, do it. Because when you are doing the easiest one, it will take less time. Assume things are something here difficult. Fine. You write how much you can, go to the next one, 17th. Don't get stuck here. Write down. Okay? Again you divide 17A, B, C, D. If you know C good, do good, C. Then you know D, do. Then last what happens? Assume that you have incompleted one here, you have incompleted one here. Incomplete. Okay? Then, is it? I don't know whether you have a concept in tennis is there. Is it right? You are talking in terms of wild card. Is it right? Wild card is nothing but you have general points. Is it? You will have general points. Okay? Fill with general points. That is the extreme case. Okay? That is the extreme case related to the situation. Is it related to the situation? If you don't have any other options, fill with general points. General points, but carefully you have to word it. Based on the situation, you have to write. This is the last option, I am telling you. This is not the first option. Is that? Why it is last option? Don't leave it. Getting your point? See the thing. If it is for 5 marks, is that? You have written 3 marks, 3 points, you don't know 2. If you leave it, 2 marks will go. If you write something, at least there will be 1 mark. And most importantly, there is nothing. Inshallah, you will get better. Inshallah, that's very simple. Is it right? Compared to others, I can vouch on you. First and foremost, think about 50 marks. You have to count. Before you submit. And see the things. By the exactly 3 hours 15 minutes, people who are writing for the first time, 3 hours 15 minutes, automatically window will be closed. You don't have any option. Last time there is a power failure that happened. Okay, that is exceptional case, but usually it will not happen. 3 hours 15 minutes, window will be closed automatically. So that you have to be very careful on that. Is that you have to be very careful on that. It means you have to think about what are the things you have done, what are the things. The moment you will get this, put 16 ABCD, 17 ABCD, 18 ABCD, khalas. Then filling these things. Whichever is easy, fill it. Whichever you find difficult, go to the next one. Automatically, you will that is why elimination aspect, you remember this. Every paper, this is the option. Automatically, just you do it and subsequently will work. Okay. Now, Centripede is a new client for ANT. If you are a new client, definitely the risk is very, very high. Is it right? You have to do you have to do a lot of additional planning. Okay. You have to do additional planning. That is the audit response. Okay. A response is you are going to do additional planning. You need experienced people. New client, you cannot put juniors. Is it right? You cannot send juniors. New client, you have to put experienced people. You have to know the detailed planning. Is it right? And you should understand the entity. Is it? This is the standard risk and standard response. Standard risk and standard response. When we do the things, is it right? Is it right? Centripede is a new client for ANTS and it is listed company. As the team is not familiar with the accounting policies, transaction balances of the company, there will be a increased risk, detection risk of the audit. Is it? There is an increased detection risk of the audit. Is it right? That is what it says. Is it? If you are having a new client, is it? If you are having a new client, is it right? Definitely you don't know the accounting policies, you don't know the environment, you don't know how they are working. Is it right? And there will be a increased detection risk. Okay. It happens to any client. Forget about the name. Okay. What is the response? The response is you have to get a good experienced team. Is it? And you have to get a good understanding of the company. Is it? You have to get the good understanding of the company. Ensure that suitable experienced team, adequate time you have to mention. Is the first time is allocated for team members to obtain the understanding of the company and risk of the material, including what? Attendance at the audit team briefing. Nobody should skip the team meeting. Is it right? Nobody should skip the team meeting. This is the first one. Okay. Next, second one. Perpetual inventory. Under the system, inventories must be continued at least once in a year. Counted. Is that at least under this system, they are saying that they are doing what? Only 1/12. Is it right? 1/12. 12 months. Is it right? 12 months, 1/12 of the sample. What is the condition of perpetual inventory? Okay. Whenever there is a perpetual inventory, the rule says that this inventory must be counted at least once a year. If you are not doing this, is that with adjustments made to the inventory records on time limit. Inventory could be overstated or understated if perpetually complete is not complete. If you are not completing once, at least every other inventory should be counted once in a year. If it is not done, If you are skipping it, it is understated. If you are counting it twice, it will be overstated. Is that under during the interim audit, where we have to do this? During the interim audit, it is noted that there is a significant exceptions with the inventory records. Inventory records are showing high, physical inventory is showing less. Is it right? That's what we have done. As the year-end quantities will be based on the records only. This is a result of inventories records are more. Is it right? Inventory records are more. Is it right? Inventory records shows more, high. Is it right? Whereas physical shows less. Means what will happen? It is overstated. What is the response? There are two things. The completeness of perpetual inventory should be reviewed and controls over the counts and adjustments should be tested. Perpetual inventory, it has to be done once in a year. At least every stock, that is the thing. It must be counted at least once a year. Now, what is the response? The response is you are going to review. Is it? Counts should be reviewed. You will review the counts and controls over how they have been recorded and how they have been tested. You will review only, okay? You will review the controls and the counts. Is it right? How they have been recorded and reviewed. In addition, the level of adjustments in the inventory should be considered significant. This should be discussed with the management as soon as possible. Is it right? As soon as possible. That means it is a full year inventory. Is it right? As it may not be possible to reliance on the you have to check with the discuss with the management. Is that you have to discuss with the management as soon as possible to how to place the reliance on the inventory records at the year end. If that is that's all. You don't write anything more. Is it right? You have see what you have to do. Level of adjustments made inventory should be considered to assess their significance. Okay? Maybe their assumptions will be different. Our assumptions will be different. Discuss with the management as soon as possible how we can rely on these records at the year end. Okay? That is the second one. Third one. During the interim audit, there are some lines of inventories records with at least how many days? 90 days old. Inventory turnover period has been increased to how much? 47 to 54 days. It appears that there is an increase in slow moving. See, inventory, I will write this, is it right? Inventory days, inventory turnover days. If it is increasing, it means inventory is moving very slow moving. Definitely in the question you will never come across that inventory days has been decreased. It is not an issue as such. They will highlight in the questions only the issues. Okay? If the inventory is decreasing, then it is a fast moving. Is that? Now, that's what it is. It would appear that there will be an increase in the slow. If inventory number of days are increasing, this is the way, these are the things which you should keep it in mind. The valuation of inventory as per IS2 inventory should be at the lower of the cost or NRV. You have to write this whenever you talk about inventory. Is right? Whenever the question is there on inventory turnover days, don't miss this one. They will give marks for this. Hence, there is a risk that absolute inventory has not been appropriately written. Means if you are writing down the inventory, you have to write down as per the rules. Okay, you cannot make your own assumption. is that the aged inventory should be reviewed and discussed with the management what are the certain, which projects are slow moving. You cannot make a generalized statement, okay? We cannot make a generalized statement. Means you have to discuss the management, which projects are slow moving. Detailed cost and net realizable testing to be performed. Whether allowances, before you write off inventory, you have to get what is the cost or net realizable value. Whichever is lower, we have to take it. Is it right? Then only we can write off the inventory. Fine. Next, point number 4. Is that point? Centipede maintains accounting standards on 4 additional sites were not visited during the interim audit. Is it? And records from these sites are operate monthly through a general ledger. Now, this is the audit risk. What is the audit response? You have to visit. Is it right? Auditor response is you have to discuss with the management and the team need to visit. That is the response you are going to give. Is it right? This is the response. They need to visit some of these sites during the final audit to undertake testing the records held there. You have to discuss with the management, fine, and you have to visit it. Is that simple way of scoring marks? Ensure that it has obtained sufficient appropriate evidence over the records of the company. Not just for those at head office. There is and needs to ensure that it has obtained sufficient appropriate audit evidence over the records of the company. We are not concerned only about head office records. We are concerned about all locations. There is if you don't go for all locations, there is a audit risk, detection. We cannot detect it. Is it right? With detection risk, if the team does not visit testing of the records at these sites. Further, if the interface does not occur appropriately, what will happen? Definitely there will be a incompleteness. The interface is nothing but you are just checking on online, just transfer of files. We are not concerned about that. Okay, we are concerned about only thing. What is the audit response? The audit response is that in computerized assisted audit techniques, CAAT. Is it right? Computerized. In addition, what is the response? They could be utilized by the team. Is it? Computer aided audit techniques to sample test the monthly interface of data from each site to head office to identify any errors. In addition, CAT could be utilized by the team to simply test to sample test the monthly interface. Okay, means you have to use the computer aided audit techniques. Is that because here they are talking in terms of what? They are talking about the software. Okay. Next, what it says, point number 6. A building was disposed of with a loss on disposal is a very, very material. Is it right? This loss is a material. There is a risk that the disposal has not been removed appropriately. There is a risk that the disposal has not been removed appropriately from the accounting records, or the loss on disposal is incorrect. In addition, significant profits or losses on disposals are indication that the depreciation policy may not be appropriate. That maybe they are assuming. Is that first they are thinking that valuation. The second they are thinking that how you get so much big loss. Maybe you have not done depreciation as per the requirements. Is it right? What is the audit response? What is the audit? Audit response is you have to recalculate the loss on disposal. You have to recalculate the loss of disposal and agree to all the items supporting documentation. What is the audit response to the depreciation? Discuss the policy of depreciation with the director. Review the level of losses. Is it right? Always see the thing. These are discuss the things with the director. These are general points where we can use when we are running short of points. When you run short of points, that is the reason we call it a wild card. If nothing works, we should not give up. We should not give up. You have to use something which is general but to the situation concerned. Is it right? Review the losses on disposals of other assets. You know how the other assets have been sold. And it is more, is it right? Ascertain if this is a more wide, means it is things which has been applicable to all, or it is only applicable to this type of asset. Fine. Point number 7. A customer commence a legal action for the loss. Is it? The moment they have a claim, any claim against the company, response is you should have a provision. Is that immediately response is, it is what it says that it is IAS 37 provisions. Is it? Provisions, contingent assets and contingent liabilities. Is it right? Now, it is probable that the company will make payment to the customers. A legal provision is required if the payment is possible rather than probable. If contingent liability disclosure is necessary. If it has not done, then you have to, where there is a risk of completeness of any provisions, necessary disclosures of contingent liability. That is the audit risk. Is that if there is any claim, definitely we have to make a provision. Write in simple words. This information is very high end. Okay, understand it. Write in a simple words. Is it? If there is any claims, definitely we have to have a legal provision. If we have to assess whether it is possible or it is probable. If it is probable, you have to make a contingent liability. We have to make a contingent liability and it has to be disclosed. Is it right? Where in terms of it, so that it will be a completeness. What is the response of the auditor? Auditor has to verify. Is it right? Discuss with the management. That's all. That's the thing. Is it right? They should write to company lawyers because it is a legal claim. Is it? Whether it is likelihood of the success of any claim from the thing. The results of this should be used to the level of, once we get the legal opinion from the lawyers, then we have to make a provision and we have to include in the financial statement. Is it right? You have to include in the financial statements. What is the point number 8? They are saying that directors have not disclosed the individual names and payments of each of the directors' remuneration. That you have to enclose means you have to enclose, is right? This is in line with the IFRS, but disclosure in this is required by local legislation. See, the rule says that first you have to follow national regulations. I told you number of times. Then you have to follow IFRS. Then you have to follow ISA. If you put all the things into consideration, then only we call it as a conceptual framework. Is it right? The director remuneration disclosure will not be complete and accurate if the names of are not disclosed in accordance with the local legislations. What is the response? You have to discuss with the management and review the requirements for the local legislation, and if it is permitted, if it is needed, definitely disclosures of the final approach, you have to disclose it. You cannot override, okay? We cannot override the local legislations. Fine. Revenue has grown by 90% a year. However, the cost of goods has been increased by 13%. This is with respect to ratios? Is it right? This is with respect to ratios. Just I will going through little bit quickly. Okay. Revenue has increased 19%. Cost of sales has been increased by 13%. There is a significant increase in revenue and increase in the gross margin. They say that may be due to the overstatement. What we have to do? You have to get a detailed breakdown of sales. Discuss with the audit response. Most of the cases you have to discuss with the management. This is the easiest way. Discuss with the management, specific, not general, okay, and tested in order to understand what is the sales, what is about the situation. Is it right? If you are talking about, yes, there is a increase in the sales and they reduce in the cost of sales, you make it a increased test of cut-off testing. Is it right? Means you should make it a cut-off testing every month. Is it right? Recorded at the right period and it is not overstated. If you are taking the cut-off every month, is it right? At the end of the year, very strictly with respect to the time gap, automatically you will reduce that is the response of the auditors. Gross margin has been increased from 33 to 37. Operating margin has been decreased from 18 to 7. Is that what is the reasons between the difference? If gross profit margin increases, operating profit margin also should increase. If the gross profit margin increasing and operating margin is decreasing, definitely what it means that what? It means your operating expenses are increasing. Is that operating expenses increases, operating profit will decrease. The classification of cost, is it right? The classification cost of sales and operate. Maybe something which have been in cost of sales, is there something we have done in cost of sales that has to be written in operating expenses. Maybe you have misclassified, is it right? That is the only reason, is that will be compared with the prior year in terms of consistency. Also increase what? Also increase the cutoff testing. The overall liquidity, what happened? It has been decreased 1.26 to 9, 0.6 to 0.39. Is it right? 0.36 to 0.39. Once, see, whenever, keep it in mind, whenever liquidity issue is there, is it right? Liquidity issue is there, you have to write going concern. Response is going concern. If liquidity is decreasing, there is no money to spend. Is it right? There is no money to spend. If there is no money to spend, survival will be difficult. Okay? Survival will be difficult. That's what it says. Is it right? Straight away, they are talking about liquidity. They say that company now has an overdraft of this much. Payables have increased from 70. These are all indications of what? These are all indicators. These are all indicators of going concern. All these changes in key ratios could signify going concern difficulties. Detailed going concern testing should be done. What are the assumptions they have taken on the going concern should be discussed, and to ensure that there should be a reasonable assurance for a going concern. A detailed testing should be done. What are the doubts over the going concern? and what are the basis or assumptions accounting should be discussed with the management to ensure that there is a goal. Anytime, see the things. Your cash crunch is there, payables are increasing, receivables are decreasing, overdraft is there. Is it right? Straight away, this is the audit risk with respect to going concern. And what is the response? The response is we have to have a detailed testing of going concern, on what basis, assumptions they have made it, discuss with the management, same words, I am not making any complication. Is it? Detailed testing on the going concern, what are the assumptions they have made with respect to going concern, discuss with the management and ensure that the going concern assumptions are reasonable. Fine. This is the audit risk and this is the audit response. Fine. Next, we will complete this and we'll stop. Okay. Okay. Sorry, but I really I'm next. Find what it says. They are saying the finance director of Centipede is informed and that one of the reasons it was appointed as an auditor was because of its knowledge of the industry, and yes, audits a number of other consumer packaged goods companies, including Centipede's main rival. Is it into Centipede? Means you are doing the audit for the competitors. The finance director has inquired that how and will keep information obtained during the audit confidential. Very, very specific question. Is it right? If you are doing an audit for the competitors, what are the precautions we have to take so that the information should be kept confidential? Yesterday or day before yesterday, we got struck up with one of the points. Yes, Faiza, correct now? Are you here with me all? No sound from your side. Yes. See the things. How? See, if you are doing the audit for the companies, is it right? How many marks are there? First, you focus on that. Okay. First and foremost, that is very important. How many marks are there? 5 marks. 5 marks, 5 points. Okay. 5 marks, 5 points. Is it? Whenever we are doing audit for both the companies, inform them. Is it right? You as an auditor, both Centrepoint and Rival should be notified that and would be acting as auditors for each. If necessary, you have to get consent. First, you have to inform them. Is it right? First, you have to inform them. Advise one or both clients to seek if they have any doubt. They can get the independent advice. See, auditor is what they will do. They will shed off all the responsibility. Auditor will not take any responsibility. Understand? Fine. Now, I told you, they have to use separate engagement teams with different engagement partners and team members. If one has been worked with one audit team, they should be prevented from being on the audit of the other team for a period of time. Is it? First, what you have to do? We have to notify it. 5 points. You have to notify it. Second, you have to inform that if you want, you can take the second opinion, independent view. Third point, separate engagement teams, different engagement partners, team members, or if anybody is working in one team, they should not work with the other team for some period of time. They have to prevent access to information. This is where I think we got struck up on that day. Is it right? We have to procedures to prevent access. For example, strict physical separation of both teams, confidential and secure data filing. You have to prevent, okay? You have to prevent access of information. Strict physical separations. There is no interaction between the teams, very professionally. Is it right? Clear guidelines for members of each team on terms of confidential, security and confidentiality. Is it right? In terms of what? In terms of within the audit engagement, when you are talking about the audit engagement letter, there should be a strict confidentiality clause has to be signed by the team members. We revise this before you go for exam. Potentially use confidentiality agreements signed by the employees and the partners. Is it? You have to get the confidentiality agreements to be signed. And last but not the least, regular monitoring about the safeguards. By whom? By the senior individual who is not involved in the audit. You have to write any file. Very, very mechanical, scientific approach you have to do. Very scientific approach. Understand what? I am telling you this. First make sure that you get 50 marks. Very simple, I am telling you. First target is 50 marks. Second target is don't leave anything. Don't leave anything. Automatically you see the difference. Is it right? You will see the difference. This is the normal rule, we can put it that. What are the things? If a auditor is doing audit for two different clients, first you have to notify. Second, you have to tell them to, if there is any issue, you can seek independent review advice. Third, engagement teams are different, engagement partners are different, engagement team members should be different. If anyone is working, he should not get associated with other team for a period of time. They should prevent access to the information, physical separation of both the teams. Is it right? They should have clear-cut guidelines about the confidentiality, and the confidentiality clause should be there in the engagement letters. They should sign the confidentiality clause agreements. Is that? See how strictly they are putting the things into consideration. You have to sign the confidentiality clause both by the employees and the partners, because as simple as that, there will be interaction between the employees, interaction with the partners. See, as simple as that. You take like this. If two people are working, two brothers, I can say like this, two people from the family working in different banks. Okay? Two people, two brothers or two sisters or brothers, whoever, that's not important. If two people from the same family working in different banks, they will never share what's happening in the bank. He said they will never say. No two friends will share. No two relations will share. That is what the confidentiality agreement. In the auditors, it will be more stricter. And last but not the least, a person who is not part of the audit team should monitor that the controls has been working, monitoring whether they have taken the adequate safeguards or not. Is it right? Is it okay? Is it clear? Can we stop now for today? Listen, tomorrow is there na? Tomorrow, Thursday, Friday, Saturday. Yes, please. I am also telling you, yes, please only. Okay, I am putting hard for that. Is it right? My. Alhamdulillah. You see, you people will pass. That is more than enough for me. Is that you? I am just making sure that you will get sufficient inputs from my side. That's the only purpose what I'm doing. Is right? I will put it on the group. Okay, Thursday, Friday, Saturday, Sunday. I will not take anything on Sunday. Okay, Thursday, Friday also. Saturday also. I don't think so. Is it? Saturday also I am not thinking so. Tomorrow or day after tomorrow, is it right? We'll see. Tomorrow I am taking financial reporting. Is it right? And let's see. Okay. I will ask you. I will send the message. Whoever responds first, according to that, we can schedule it. Is it okay?